Good morning, it's Harvey Jackson. Lots of news over the weekend. True Social post saying that Iran has 48 hours before they start hitting energy infrastructure, and that would actually impact water desalination and other problems that would result in that. And of course, Iran said that they would retaliate on energy infrastructure with neighboring countries as well. So let's just get into it here. So this post just came out. 6:05, and just basically saying that there is some talks, and we are in talks, and we'll continue. But the other bigger caveat is that he was going to delay it by a 5-day period. Before this, it was 48 hours. And this is some of the ultimatums, and I still don't. I think all of this is still probably going to be in queue, like no missile program, zero uranium enrichment, decommissioning of nuclear facilities, protocols for weapons, arms control treaties, and no financing of proxies, which is probably the Israel lean in there as well. So Iran threatens to strike Gulf power, just as I said before, if that 48-hour timeline was set. Now we've kicked the can. So obviously Taco kind of comes into play here again. Trump always chickens out. But yeah, so most of the news that I put in here is actually all about that. But continued pressure on the world for this oil prices going up, uh, and I think that might have put some pressure on Trump as well. Canada offers financial aid. I think this was already well known, but it's got published again. But there's you can get interest free up to $500,000, which is good. Um, some of the crush capacity utilization, almost exactly the same as last week. 248,924 metric tons crushed last week, and that puts you at 7.7 million. You're on pace to get to 12.6 at this current pace. Now, year to date right now, at 93% capacity utilization, and it does slow down as you get into the spring for sure. And I'm usually not paying a whole lot of attention, but it's backward looking at how the funds are positioning, and when the market is going up, they're actually positioning with the market, and the crude oil is doing the whole thing for a lot of the grains here as well. Let's have a look at the weather. You can see the cold to the north and warmer to the south here, and that's the current temperatures. And here we are with the just current temperatures as well in the U.S. You can see it does move and gets quite warm. You see it here as well. That heat without significant moisture or soil moisture could add some pressure to especially some of that winter seeded crops. We'll have to see how that all plays out. Moisture in South America looks sufficient, of course, in all three weather models. So this is where timeline actually kind of gets skewed here. The market was up $5 when I first started looking at it this morning on the canola, but when I took the snapshot here, it was up 2. And then if we go to the next slide, you can see that it was already down 5, and that was a result of the same post. Immediate reaction right away. So canola down. 5.5 at the time that I took this, but you can see that even the 78.6 retracement value seems to be kind of putting a lid on it, and it's still above the support line. So you can see this consolidation, absent of the big leg down and recovery the following day. Same thing with the new crop November contract, but we're actually hovering closer to the top end of that range. Your rapeseed, it's pulled back. Still some softness in here. There is a Mars report that'll be coming out, and I don't know the time because it's European, but it will be talking about the actual planted winter wheat and rapeseed. So we'll be reporting that tomorrow for sure, and see if it actually has an impact on wheats and stuff like that today. Here's your soybean futures. Basically, that previous high has actually created a ceiling for that market as well. Crude palm oil, the same thing. Here we're going to look at just how the crude is traded with this up and down here today. So this is just when he put out that post. You can see that leg down there in the minute chart. And same thing with the diesel fuel futures has actually had a pretty good pullback. Here's your Canadian dollar. It's looks like it's breaking some of that support when you look at the day chart, but when you look at the minute chart, it actually had a pretty good recovery. And the same thing here with the U.S. dollar. It goes the opposite direction. Have a look at wheat. There's a bit of a ceiling on here, and at the bottom end of this kind of a flag range here, and the minute chart just shows that kind of fall off here as well. So here we are with the Kansas, right at the bottom end of this trading range, or this upward trend, way above the 200-day moving average. And when you look at the Chicago wheat, you basically broke that uptrend and approaching that 200-day moving average. And the French milling wheat, the Matif, it's right very close to the 200-day moving average here. And yet the corn futures still look like it's short-term supported up. Quick look at the live cattle, right at the 200-day moving average. So, and there was a cattle on feed report, but I think it's more neutral than it was anything. But maybe I'm not the best at reading that one just yet. I will get better practice at it as well. Your feeder cattle supported at the 200-day moving average as well, and your lean hog futures have fallen apart, and it looks like it's going to. If you can get through there, then you've got your 200-day moving average that would be support. That's all I have for you today.